Hello everyone, George DeSantis here with the look at the market. It's a brief look at the market, try to see where we are as of today. Some interesting things appear on the charts now, so let's take a look at them. Before we do, we need to bring up the disclaimer. So just bear in mind that I'm not attempting to give any particular person investment advice here. I'm a psychologist. I do this for my own purposes and put it on a YouTube video so that anyone can take a look at it and do with it whatever they will. So I'm going to start looking at the charts with you in a moment. So I'm going to take a look at a chart that I developed from the information that Jake Bernstein gave us in one of his videos some time ago. Um, and this is a chart of the S&P. It's a daily chart, the S&P 500. We've been following this chart now, using this chart for some time. Let me expand it a little. Um, what you can see here is that when we had this big drop, as we all know, we had a hammer here, and the market started hammering out at bottom, and then it rallied up. Now, what we are seeing right now, where we stand right now, is this: we have a triangle. If you plot the ABCD triangle, that's A is the high here, the low here is B, right? This touch of a triangle here is C, and this one here is D. Okay, so you have an ABCD triangle. And when I calculate the target from the ABCD triangle, we get a pretty high level. We get 5139, which is even above what Tom Lee's target is, 4850. Now, of course, targets are targets. You could hit it or miss it. But very often these targets, at least they come in sight. They show up, as numbers that we can rely on. So we'll see, but we don't even have to get that far in order to make some money here. If in fact the triangle is being resolved to the upside. So right now, you can see that we had a channel going down here. I took it off to reduce the number of lines on the chart, but we had a downtrend with a channel going down. Okay, now since then, we started having a rally, and this channel, we have a new channel going up, bounded by these two lines, these two somewhat parallel lines, light blue lines, okay? Now, we briefly closed below it a couple of days ago. This was what, 27, right? February 7. And then we had a nice bullish candle on the 8th, which is yesterday. And the bullish candle led to a gap up today. Market gapped up today. And it's now outside of the triangle. So it's breaking above the triangle, which is bullish. And I'm just going to point out all these things to you so you can understand what I'm trying to get at. That means also that it broke above that 45-43 support resistance line that we had plotted. See, we had resistance here, we came down, we went up, we came support here, and then we broke through that support resistance line. Now this line was serving as another resistance, as a resistance again, but today we are breaking above it. So that's interesting. That's a bullish sign. Okay. We have parabolic below the most recent bars since we had a switch over here. Since we had a switch back on January 31st, parabolic became bullish. Okay. And it's still bullish. Uh, we don't have, this is Jake's 10-day moving average of the highs. And in order to have a buy signal, as some of you know, I'm sure, we need to have two complete consecutive bars above this green line, this 10-day moving average of the highs. So far, as of today, as of this moment, we have one complete bar above this moving average of the highs. We had one earlier here, but we didn't get two consecutive bars. So and then we didn't have a signal here either. We didn't have a setup. Where we stand now is we still don't have a setup because this AD line, the accumulation distribution line, is still below its moving average. It's 57-day moving average. If it crosses and when it crosses above it, we would have a setup or trigger. It depends which one occurs first, whether we get two consecutive bars above the moving average here first, and then we get this break above the 57-day moving average. We would have a setup and a trigger. If this breaks above the 57-day moving average first, that would be the setup, and then we get two consecutive bars here. That'd be a trigger, a buy signal. Okay, so this chart is looking pretty bullish, and right now the market is in an upswing here. We are somewhere around 45.73, so we are somewhere around, yes, 45.73 and change. This chart is 15 minutes delayed, so it's a little different from real time. Now, another thing I notice is that I don't have it on this chart, but the 50-day volume weighted moving average is now at about 4,600. So I'm thinking the next resistance level will be 4,600, which is about here. That would be our next resistance level, okay? Where the 50-day volume weighted moving average lies right here, okay? So that's where we stand. Let me see if I could put it on. I'll show you. Moving averages. I tell you what, we don't need to do that. Trust me on this one. It's 4,600. That's where the moving has come down like this, and it's lying right here right now. So that's where we stand, folks. We still don't have this advanced decline line for the S&P trending, moving above the 57-day moving average. And why don't we take a look at the MACD? MACD looks pretty bullish. We got a buy signal here when we closed above here, above resistance. And since then, it's remained on a buy signal. And today, in fact, MACD is showing us a pretty good histogram candle here, So I would say hang on to your to your boots, because it looks like we're at a very critical point. The bears and bulls are fighting it out here, but I think the bulls have a little advantage right now because of all these things I just mentioned. Breaking above the triangle, breaking above this support resistance level. We might go higher. I suspect we might go higher from here. And I am almost fully invested, so I declare that for whatever it's worth. Okay. That's all, folks. Have a good day, and we'll talk to you on the weekend. We'll have our usual meeting on the weekend.